Hello and welcome to the channel. In today's video I'm going to be talking about insulating your properties against interest rate rises. There's going to be no advice, it's just going to be information only. Now before we start I'm going to ask two favours. First of all, give the video a little like, that's if you like the content, and I'm also going to ask you to check out the video description for this book that I've published, and it's all about my 20 years in property investing. Now this video is a video about property investing, and it's especially for beginners looking to invest in property, and this is what this book's all about. This book is ideal for beginners looking to invest in property. It's split into two parts. The first part identifies all my mistakes I've made over 20 years, and the second part is my transition from average landlord to professional property investor. This will help you. It'll help you avoid all of my mistakes, and it'll show you all the techniques you need to become a successful property investor. So, interest rate rises. Interest rates, inflation, it's very important. It's important for everyone, and it's important for property investors. Don't just buy your first house without doing some research, without understanding interest rates, without understanding inflation, because it's important when you come to choose your mortgage product. Now, if I was just starting out, I would speak to a financial advisor, and this is what I done all them years ago. 20 years ago, I spoke to a financial advisor to get a mortgage product, and I've used the same financial advisor over the years, and that's enabled me to understand the mortgage products and choose the mortgage product more suitable for me. And that's what I'm going to be discussing in today's video, to make sure you understand mortgage products, you understand inflation, interest rates, and you can choose a mortgage product that's suitable, that helps you and insulates you against interest rate rises or potential interest rate rises. Insulate your properties from interest rate rises. Start with education and work on financial literacy. This will help you to understand interest rates. Discuss mortgage products with your financial advisor. As I've said, speaking to your financial advisor, you'll be able to understand interest only or repayment and choose the one that's more suitable for you. You'll be able to choose fixed or variable, and again choose the one that's more suitable for you. Now, this might seem boring, but it's very important to understand from the start. Some background info on inflation and rising interest rates. QE is definitely worth getting your head round. QE stands for quantitative easing, and it's where governments print billions and trillions of fiat currency. Now, QE has been going on for decades, especially since 1971. And the significance of 1971 is that this is when President Nixon removed the US dollar from the gold standard. This is important to understand. This has led to inflation, and inflation affects us all. And it's kicked on again since the financial crisis of 2008, and it's got even worse since COVID in 2020. As I've said, QE leads to inflation, and this leads to pain for the majority of people around the world. Inflation weakens your fiat currency. So if you have 10,000 and get 1% interest from your bank, and inflation is at 10%, your money will lose 9% in value year after year if rates remain the same. Rising inflation normally leads to rising interest rates, and that includes mortgages. What if these interest rates went back to the early 90s? Now in 1992, the interest rates were about 10%. Imagine your mortgage payments if the interest rate jumped to 10%. The current Bank of England base rate is 1%. At the time of this video, mortgage products are linked to the Bank of England base rate. Do I think interest rates will rise to 10% or even more? No. Remember, this is only my unqualified opinion. Personally, I think they'll go up, but maybe only by 2 or 3%. Time will tell. what I do with my properties. The whole purpose of this video is to tell you how I insulate my properties against rising interest rates. I like interest only, and this helps me to benefit from cash flow. But I'm also aware that the mortgages need paying off at some point further down the line. I have half on interest only and half on repayment for some diversity. But the important thing is that they're all on fixed term deals. This is massively important. So if my properties are on fixed term deals, it means that interest rate rises don't affect my properties. When I arrange my products with my financial advisor, I look to get 5-year fixed deals, and this insulates me against potential interest rate rises. Very, very important to educate yourself so you know all about inflation and interest rates so you can insulate yourself in a way that suits you. So the whole purpose of today's video is to help you understand interest rates and to help you insulate your properties against interest rate rises. And the way that I do that is I get a fixed term product and I fix my mortgages for 5 years. Now, this is something to consider, and again, discuss this with your financial advisor. This will help you to understand interest rates, it'll help you to understand the mortgage products, and it will help you to choose a product that's suitable for you and your property investing.